Hey everyone, so yesterday afternoon, the most powerful people in the financial system basically told you we're willing to keep your life expensive to protect the dollar, and almost nobody is talking about what that means for Bitcoin. So let me walk you through what happens, why it matters for your money, and why, if you care about Bitcoin, you cannot ignore this Fed meeting. Yesterday afternoon, the new Fed chair, Kevin Warsh, stepped up to the mic for his first big meeting. Everyone was expecting some versions of the same old story. Inflation is cooling, cuts are coming, just be patient. Instead, Warsh did the opposite. He said in plain English, we're not cutting rates right now. We might not cut at all in 2026. In fact, there's a decent chance we have to raise interest rates before the year end. The market hates that. Stocks dropped, bond yields jumped, and the message to regular people was very simple. Your money is going to stay expensive. Your debt is going to stay painful. And the cheap money party is not coming back as fast as you were promised it. Now, why does that matter for you? For me and for Bitcoin? Because interest rates are not just some nerdy macro thing. They bleed into everything. The mortgage you can afford, the credit card balance you're carrying, the business loans that keeps companies alive, the valuations of tech stocks, and the risk appetite for things like Bitcoin. Let's rewind a bit so this makes sense. Trump has been loudly demanding lower interest rate ever since he got back into the White House in 1925. He wants booming stock market, cheap borrowing, and an economy that feels great going into the next election cycle. The problem is he doesn't control interest rates. The Fed does. So what does he do? He appoints Kevin Warsh as the new Fed chair. Warsh is his guy. The expectations was, okay, Trump picked him. That means we're finally getting cuts. The pivot is coming. Risk assets go broke. That's what the market's priced in. That's what a lot of investors believed. Then the data has changed. Inflation, which looked like it was cooling off, turned around and hits a 3-year high. A big part of that came from energy, oil prices spiking because of the conflicts in the Middle East, especially with Iran. And when oil prices go up, it doesn't just mean gas is more expensive. It means everything that move on the truck, a ship, or a plane gets more expensive. It gets into foods, flight, shipping, logistics, your whole life. So Warsh is sitting there looking at economies that want cuts, a president who won cuts, markets that have price in cuts, and inflation that is saying, if you cuts right now, you might pour gasoline on this fire. What does he do? He chooses the dollar over comfort. He said no cuts, maybe hikes. We're going to keep policy tight longer than you thought because I'm not going to be the guys who lose controls of inflation. And this is where I want you to really pay attention, because this is the decisions that tie directly into Bitcoin. We know how to deal with recessions. We've seen that moves again and again. Cut rates, print money, stimulate, assets price go up. Everyone cheers. We've done that over and over for decades. What we don't know how to deal with as cleanly is a currency crisis. A currency crisis is not the stock market 20%. A currency crisis is people stop trusting the money itself. They start dumping the currencies because they don't believe in the long-term value. The last time the US flirted with something like that in a serious way was back in 1970s. We came off the gold standard, printed aggressively, inflation exploded, and there was a real fear that the dollars was losing credibility. How did they fix it? They crushed the economy. The Fed jacked interest rates to insane level, double-digit market rates. Business got wrecked. People suffered, but it eventually saved the currency. That's the trade-off. You can either save the economy in a short term, or you can protect the currencies in the long term. Both. Doing both is extremely hard. What's worse is signaling right now is I'm leaning toward protecting the currency. He's saying I'm willing to risk weaker growth, a choppy stock market, and more pain for borrowers, if that's what it takes to convince people the dollars is still credible. And that is exactly where Bitcoin comes in. In the short term, I'm not going to sugarcoat it. Bitcoin does not love this environment. When interest rates are high and staying high, safe yields becomes more attractive. Money gets more expensive. Risk assets get repriced. That's why you see this pattern where as soon as the market realizes, oh, cuts aren't coming, you get pressure. You got pressures on tech, on growth names, on speculative stuff, and yes, on Bitcoin. Some people look at that and say, see, Bitcoin is just another risk asset. It goes down when liquidity dried up. It's no different, but that's the short-term view. Let me ask you something more important. What happens to a heavily indebted government when interest rates stay high for longer than expected? The U.S. is sitting on tens of trillions of dollars of national debt. When rates stay elevated, the interest rates on that debt exploded. That interest cost is now one of the fastest growing expenses for the governments. So you have this insane situation where Fed is keeping rates high to fight inflation and defend the dollar. High rates are making the government's own debt more expensive. At some point, the maths stop working cleanly. What do you think what happened then? Do you think they suddenly become responsible and start running massive surpluses to pay down debt? Or do you think eventually they go back to the same playbook they always use, printing more, borrowing more, inflated it away quietly over time? That's the core of the Bitcoin thesis. Bitcoin is not just number go up technology. It's a ways to opt out of a system where your money is constantly being managed and massaged and sacrifice based on what political convenience is the moment. Now let's bring this down from the macro and make it personal. Right now, the average person is not sitting there thinking, oh no, Kevin Walsh might trigger a dollar crisis in 15 years. They're thinking, why is my mortgage still so expensive? Why am I paying 20% plus on my credit cards? Why are groceries still up? Even if they're saying inflation is coming down. And this is the nasty trick of inflation that almost nobody explains. When they say inflation is falling, they don't mean prices are coming back down. They mean prices are just going up more slowly. That's it. You don't get 2020 prices again. You get 2026 prices going up at a slower pace. So every year you sit entirely in dollars, you are slowly bleeding purchasing power. You don't feel it days to day, but over 5 or 10 years, it's brutal. Bitcoin step in as a way to stay. I'm not playing this whole games with 100% of my net worth. I'm taking a portion and pocket in something with a fixed supply, no central committee, and no election cycle. And this is where I want to ask you a real question. If you know the people's in charge are either going to A, keep rates high and squeeze the economy, or B, eventually print against and squeeze the currency, why would you choose to sit there fully exposed to both sides with nothing in an assets that doesn't rely on their promises? Now, I'm not saying go all in. I'm not saying take your rent money and ape it into Bitcoins because Kevin Walsh at a top press conference. That's stupid. What I'm saying is yesterday afternoon, the Fed showed you the box they're trapped in. Inflation is still a problem. The government's debt is a problem. Politics are screaming for cheap money. Reality is screaming for tight money. And somewhere in the middle of all of that, you have Bitcoin quietly doing the same things it's always done. One block at a time, one halvings at a time, one fixed supplies schedule that doesn't care who's the president is. So as you watch this played out, stock wobble, housing struggle, Bitcoin's getting tossed around by every Fed's headlines. I want you to keep one idea in the back of your mind. Volatility is the price of admission for any assets that isn't controlled by the same people who just told you they're willing to keep your life expensive to keep their system alive. You can be mad about the volatility, or you can recognize what it's saying about the world we're living in. Because if you actually listen to what the Fed just said yesterday, they quietly make a long-term case for Bitcoin louder than any influencers on this platform ever could. And the real question is, are you paying attention to that, or are you just watching the candle?